What's up with volatility? That's what you need to know before the bell. Over the course of the last few months, a lot of bearish rhetoric about the markets, banking crisis, potential recession, all these type of things, and yet the market continues to rally here. And as we've talked about here recently, markets are in a more bullish mode right now, the MACD buy signal in place, as well as the trend of the market since the October lows has been a series of higher lows and higher highs. Markets pointing higher this morning, suggesting another advance as earnings season is coming in, not surprisingly, better than expected since we lowered estimates so much since May of last year. But importantly, let's take a look at the Volatility Index because that's also sending a very interesting message. Volatility has absolutely collapsed, breaking below 17 yesterday. Had gotten to a high of about 26 here during the whole banking crisis issue. But immediately after that, the markets reassessed that whole banking issue. First we had Silicon Valley Bank, then Credit Suisse. Immediately after that, the market said, not worried about it, and volatility absolutely crashed. Now, what this is telling us, obviously, is that the VIX is called the fear-greed gauge, right? It's that when volatility is declining, people simply aren't worried about a market crash. They're very bullish on equities. In fact, if we take a look at equity exposure by investors, that's been rising as of late. Bullish sentiment's been improving. So, again, no worry here right now about a recession. And in fact, even during the course of the entirety of last year, when we go back and look at volatility over the last couple of years, we can see that, yeah, volatility did spike on a couple of different occasions when, for instance, when the Fed started cutting interest rates and saying, hey, we're going to keep hiking to the moon, we had a volatility spike, markets sold off. If you take a look at the market last year, repeated sell-offs in the markets, followed by advances, and every time we got these advances, volatility fell. Well, we've now fallen to a level lower than all of those periods last year, even when markets were in strong rally mode last year. Remember back in March, April, May, we had that 20% rally in the market. Again, volatility even now lower than that. So certainly no concern by the market right now of a recession or an economic downturn at this point, or even the Fed continuing to hike rates. Markets are pricing in no fear at this point. But again, if we go back further and look at this market over time, the level of volatility now is at levels that has historically been kind of lows during more bullish advances in the markets, with the exception of this big spike that we had back in March of 2020, obviously when we shut down the economy, had this exogenous event that occurred that really scared investors. That's where we got this big kind of fear push in the markets. Again, we haven't seen a spike like that. We have to go all the way back to 2008 to see a similar spike to that level that we saw in March of 2020. But even during periods of quantitative easing, when Ben Bernanke was doing QE1, QE2, QE3, Operation Twist, etc., we only saw a few periods where we had a volatility spike of any magnitude, not nearly to the levels that we saw in 2008 or 2020, but we did have spikes here during the debt ceiling default issue, the Brexit issue, taper tantrums. We saw volatility spikes as well, 2018, 2019. We're now approaching levels that have been more consistent with more continued advances in the equity markets. Again, despite all of these fears and concerns, that's a very interesting message right now that volatility is sending. One of the issues, of course, that may be impacting this is the rise of 0 days to expiration options that have been a much more prevalent part of the options market complex that are not really reflected in this level of the VIX. But the one thing to be thinking about here overall is there's a lot of negative sentiment out there suggesting that we're on the verge of a major recession. Markets are going to fall dramatically. Volatility markets certainly not confirming that case right now. They may, but they're not just yet. So again, manage your money accordingly, manage your risk accordingly. And if you have any questions or comments, get by the website, realinvestmentadvice.com. I'm your host, Lance Roberts, and that's what you need to know before the bell. What's up with volatility? That's what you need to know before the bell. Happy now?
Yes.
Okay.
Ecstatic.
Okay, good. As long as you're happy.